Hey, hello friends. Welcome to 30 CAGR YouTube channel. Friends, in this video, we're going to discuss about a strategy, a new strategy that would help for option traders, especially if you are trading in time-based strategies. This strategy would help you. And once again, this is for someone who aims at moderate profit, but looking for something that doesn't give too much of loss, right? So for those people, this strategy will probably help as a starting point. And of course, you also can do a lot of other modifications to this strategy, and this will be in two parts. In this video we will just discuss part one of this strategy, and in the next video we will also be discussing the enhanced version. Okay, so before we begin any strategy, all right, we first need to go with a premise. Okay, we need to have some kind of thought process how we are building the strategy. Only then you will understand why a particular strategy is behaving in a such a way. So we will first have some understanding about the strategy. We all know that time-based strategies are, pretty common. You sell a call option, you sell a put option, right? As I told you, the most important thing in this strategy is to lower the losses. Losses should be minimized. Okay, forget about the profits for some time. Even if we get moderate profits, that's still fine. But these days many people are coming to us saying that, sir, I need strategy which is extremely safe and all. So the mind or the thought process has shifted in traders also from too much of profits into probably limiting the losses. So with that premise, what we will do is we will make sure that we don't get too much of loss in any strategy. All right, so in the morning generally you sell a call option, you sell a put option, and you get maximum loss when both the stop losses are hit, right? Let's say in this stop loss call option, stop loss got hit, and put option stop loss got hit. That is where you get maximum loss. So the thought process here is not to have stop losses in both the legs. This is the main idea behind this strategy. So how we will do is, let us say at 10 o'clock you entered into a strategy. Okay, one call option and one put option. Now maybe you entered into ATM, or you entered into some call option or put option which has like 50 strike, okay, or 50 premium, sorry. Now you place 100% stop loss here, and remember we only trade on expiry instruments, which means on Wednesday we trade in Bank Nifty, on Thursday we trade in Nifty, like that. We only trade something that has expiry on that particular day, because time decay is what we are trying to eat. Okay, so 100% is the stop loss, which means this 50 rupees stop, 50 rupees premium leg has 100 as the stop loss, and for this also 100 as the stop loss. Now let us say on that day markets fell heavily and then this 50 became 100. What will happen? Stop loss gets hit. Now this 50, this will not become 0, right? This will probably become 15 rupees or 10 rupees. Remember we are selling. Okay, so this is a profitable leg now because markets fell, and this is a loss leg for us. Now what you have to understand is, here we got loss of how much? 50 points. Here we got profit of how much? 35 points. So this is plus, this is minus. So the net is minus 15. Now once this stop loss gets hit, what we need to do is we need to exit both the legs and come out of the entire strategy. Of course, this one anyways will get stop loss hit. This will be executed. This one also, this call option also, we will exit and come back, because of the same reason that we discussed earlier. We don't want this call option to get stop loss hit. If market reverses, this call option also will have a stop loss hit. We do not want that. So what we are doing, we are coming out of it. Our loss is 15 points. We will happily take that loss and we will come out of it. Now here's the second point. First point is what? We will exit both the legs when the stop loss gets hit. Now the starting of this strategy is 10 a.m. and we will only run this for 2 hours, which is till 12 p.m. or you can start at 9:30 and then exit at 11:30. It's up to you. I'm just giving you the idea and I will show you the backtesting results. Now let us say this is one set, and run the exact set from 12 p.m. to 2 p.m. again. Okay. Now, why we are doing this is, again, in this also, even if we get a loss again, okay, let's say some leg stop loss got hit, again, we will get a small loss of 15 points. That is absolutely fine. But let us say in set 1 or set 2, market did not move at all. Then what happens? Call option and put option both will start falling, and we will capture a small decay of 5-10 points in call option, 5-10 points in put option. So 15 points or 20 points we will get as a profit if market doesn't move in the first set or second set or even the third set. We are going to talk about the third set. So whatever you loss you got here, okay, that will be recovered when the markets are not moving in any particular set. Okay. So what will happen here also, we will do the same thing, and then again at 2 p.m. we will take the third set till 3:28 or 3:30 p.m. Okay, so like that we will have first set, second set and third set. This way if you trade, what happens is you are not allowing the market to hit the stop loss in any of your second legs. Okay, so with this premise, first let's see what are the backtesting results that we have, and then how are the results bifurcated and all other things. Okay, so this is just an example, guys. You can change all the times and all, you can change the premiums, you can enter at ATMs and all that, but I am just giving you some idea how to develop the strategy, how to create your own strategies. Okay, so this is for Bank Nifty. We are entering at 10 o'clock till 12 o'clock. I have put 11:55 just to give 5 minutes difference between the first set and second set. So you enter at 50 premium. We are not entering at ATMs or any particular strikes. We are entering at any strike that has 50 premium. Okay, call option and put option. 100 points stop loss, 100 points stop loss, and this is the most important thing. Square of all the legs. If one stop loss gets hit, second leg also will be exited. Okay, and same we have at 12 o'clock, and same we have at 2 p.m. also. Same premium, and then 100 points stop loss, 100 points stop loss. Okay, and then Nifty, same Nifty also 10, 12, 14. Finnifty also 10, 12, 14. Only difference is premiums would be lesser, obviously. For Nifty we are following 20 premium, and for Finnifty also we are following 20 premium. Okay, for Bank Nifty 50, Nifty and Finnifty 20 and 20 premiums. And we have selected 0 DTE. Remember, I told you already that we are only going to trade in the instruments that expire on that particular day, which means 0 DTE. And slippages 0.5. Please do not backtest without slippages. There are many people who tell you all sorts of strategies, but they don't have slippages. It is not possible to reproduce all these in the live trading. And data I have taken from October 19th because Finnifty is available only for October 19th. And one important thing I forgot to tell you, this backtesting we are running only for 3 indexes because of the lack of data. We don't have Sensex and Midcap Nifty for now. Maybe in the next 2 to 3 months we will have like 1 year full data. Then you can just do this experiment or do this strategy on all 5 indexes. So whatever results that we are getting now, we have to extend it to all 5 days. We are only getting it for 3 days in a week. We need to extend it to all 5 days. Only then we get a full picture, okay, how this would perform in future. Right? So so you can see that this is for 1 year 9 months. Okay, 1 year 9 months means 12 plus 9, 21 months. All right. And if we run this, you can see that we got some result. Before deciding whether it is a good result or bad result, we need to know how much capital is required for this. Generally, the capital required for a strangle is around 80,000 rupees. And if you hedge, of course, it will come down. But for the sake of demonstration, I'm not doing any hedges. So for 80,000 rupees, you get one strangle. And the results here are 51,000 rupees for 3 days. So we need to have a calculator now and see 51,000 rupees divided by 3 indexes, which means each index is giving how much? 17,000 rupees. But we have 5 indexes and we can trade all 5 days. So into 5. Alright, so the actual result that you might get for all 5 indexes would be 85,000 rupees. But one thing you need to remember, this 85,000 rupees is for how many months or how many years? 1 year 9 months, which is 21 months. We need we need to take the average for 1 year for calculation purposes, right? So this entire 85,000 is not for 1 year. So what we have to do is 85,000 divided by 21 months, we get an answer for 1 month. 1 month is 4,000 rupees. Now we need to figure it out for 12 months, which is for 1 year. So this is the actual amount that you get for 1 year as per the backtested result, right? This is the average. How much is it? 48,000 rupees. So if you put 80,000 rupees capital, 48,000 rupees is approximately 60%. Okay. Now guys, remember this is after slippage. Okay, but you still get so many injections, or you might miss the trade, technical glitches, broker glitches, exchange glitches. Even if you are able to produce 50% of this, 50% of this, that will be like 30% per year. 30% return per annum after all the expenses is an excellent return in any standard, in any market situation. Okay, if anybody is a beginner, they might think that 30% is very less, but experienced and professional traders know the value of 30% return per year consistently. That's the most important thing, consistency. Okay, anyway, so let's continue, and let us also be honest about the metrics. Okay, I told you that this does not give maybe too much of a return, okay, but it is generally for safe traders. So you can see that the max loss is only 1600 rupees at any given point in time, which is 2%. Okay, even the drawdown is 6600, which is 8%. Again, 8% is actually lesser in stock market trading. Okay, or maybe not lesser, it is like a moderate kind of drawdowns, which is acceptable in the community. If you have 20%, 30%, it might be difficult, because in the live trading it might even be doubled. Okay, so here it is 8%. Even if you double it, it's like 16%. 16% is generally okay, but I don't say that it is great drawdowns, because we also have some strategies in our blog, bluechipalgos.com. You have something called strategies here. There we have some free strategies and paid strategy. In the paid premium strategies, we also have strategies that have like 4% drawdowns also. Okay, 3% drawdowns also. Okay, so let me be very honest, I'm not saying that 8% is less. At the same time, it is not very high also. It is manageable drawdowns. Okay, you can see return time date is 4.36. okay, expectancy is not bad, 0.4. anything above 0.4 is fine. As I said, there can be some things that we can do to increase the expectancy. As I said, in part B, I will tell you how to increase the expectancy, how to increase this, how to increase this, how to reduce this. All these things we will discuss in B. But as I said, we also have few strategies that have expectancy of even 0.8, 0.9 also. Okay, and MDD has 10, 12, 13, 15 also. So point is, there can be so many other defined or experimented strategies, but you need to understand that this is also not really bad. Now if you go to the monthly breakup, you can see it is also not very bad. Remember, this is for 3 days, guys. Last year 27,000 means you will actually get, let us say this is for 3 indices, 9,000 per index. 9 3 is 27. You might get 18,000 more, which is like what, 45,000. Actually this should be around 45,000 if you extrapolate to other 2 indices. So whatever numbers you see here, you need to extend it to another 2 indexes. So this is also not very bad. Good spread across all the months, and even correlation matrix is also fine. Everything is fine. Drawdowns or even the win rate is also good. And the best part is, these time-based strategies you can automate end to end. You do not need to do anything if you automate this. There are so many tools available, right? Even with us also, TradeBoss desktop. I generally trade using desktop, but there is a web also. So there are great tools available to automate these kinds of time-based strategies. You don't need to just waste your time in sitting and then executing the trades. That's the beauty of these time-based strategies. You can automate end to end. Okay, right from taking the entry to stop losses to trailings to exits, everything can be automated in these time-based strategies, right? And just to give you an example, as I said, I trade using this desktop, and many clients use web. In fact, I also use web at times, web platform which can be operated from mobile. So yeah, this is how you generally automate the strategies, and every day they keep running, and you just have to check intermittently what's going on. So let's get back to the strategy. As I said, this is what the strategy is all about. For someone who doesn't want to take much risk, I think this is like a good strategy. But wait, as I told you, we are going to improvise this strategy, and in part B we will discuss how to increase the profit, how to reduce the drawdown further, and other things. Okay, meanwhile, if you want to try your hands on this, just all the parameters, just go ahead and change these parameters, change the stop loss from 100% to 50%, 60%, 30%, or change the days from 0 DTE to 1 DTE, or change the entry times. So there are a ton of things that you can do. Just try it out and let me know in case if you have better results than this strategy. Okay, so that's all we have for this video. Hope you enjoyed. If you liked it, please hit a like button and share with other core traders. They also might benefit. And as I said, if you haven't subscribed, do subscribe. These are the things that I will bring to you: new strategies, new tools, new indicators, and other things. If you are a trader, I'm sure you will get great content in this channel. So subscribe and hit on bell icon. Okay, thank you so much for watching and have a great day.